Sometimes companies are growing too fast and they require more capital. They're investing in software, AI now. My team here at QualiFi, our team, we're taking all the lessons learned and all of the experience from the last 3 to 4 companies and rolling it all into QualiFi, which is going to be our biggest and best yet.
The way you described, sometimes when people, they reach the top peak, they do not recognize where they come from.
It's how you learn so you don't make that same mistake the second time. And you just, as long as you don't quit, you never fail. But those little tiny failures are your lessons learned. That's what's going to make you such a smarter and better entrepreneur. Take that action, because the action will create the motivation. And from there is all the learnings, and that's where your journey begins.
I totally agree with you, because I have disabilities. I am in the autism spectrum, in Asperger's. I am dyslexic. I have a brain tumor surgery. I born in a rural village in Bangladesh. Hello, everyone. Thank you for joining today's Innovative Circle podcast. I'm your host, Dr. Shah Siddiqui, founder and CEO of Time Research and Innovation, 𝐀𝐛𝐨𝐮 Marketing Agency, and Tadbot AI. As you know, ICPcast is an initiative to bring innovative ideas, transformative strategies, and forward-thinking insight from various industries, whether it is in technology, artificial intelligence, marketing, finance, lead generation and sales, business advisory and development, tax and accounting, or sustainability. We have all covered. We bring you insight from some of the brightest mind, C-level executives, and industry leaders who are shaping the future. In today's episode, we are thrilled to welcome Eddie DeAngelis, founder and CEO of QualiFi. QualiFi is a business finance company, assists small and growing businesses in obtaining swift and flexible funding without the burden of corporate bureaucracy. With over 25 years of experience and 2 successful acquisitions under his belt, Eddie specializes in business team loans, lines of credits, equipment leasing, and invoice factoring, offering funding up to $75 million. He is known for his relationship-first approach. Eddie has built trusted relationships across the lending industry in the US. Through QualiFi, he is on a mission to help business owners boost cash flow, consolidate debt, and grow with confidence. We will discuss how to qualify and empower business to grow faster without wasting time on bureaucracy today. So, to all our viewers, get ready for practical strategies, insightful discussion, and fresh ideas to help you grow, succeed, and make an impact. So we have our guest, Eddie. Thank you very much, and welcome to Innovative Circle podcast. How are you today?
I'm doing great, Dr. Shah. Thank you so much for asking, and I appreciate you welcoming me on the show.
It is great. And Eddie, this is just a formal conversation. So we're going to be premiering it to LinkedIn and all of the social media. And we will have people, entrepreneurs, and problem solvers, basically, to watch this episode and learn from your experience and expertise. So this entire episode is designed to ask you many questions, 12 of them. And each question is designed to get insight from you that you have achieved the successes and how you solve your problems. So thank you again to joining this podcast, and to viewers. We will have a very interesting session today. So my first question to you, could you provide a brief overview of your business and share what inspired you to enter to this field?
Absolutely. So thank you for having me, Dr. Shah. A brief overview of QualiFi. We help business owners that are maybe struggling with the ins and outs of conventional bank financing. They're either having issues getting approved from their bank because conventional banks have lots of hurdles you have to challenge and red tape to go through, whether it's profitability, personal credit, time in business, debt to income ratio, all those hurdles. And in many cases, business owners, probably 80+%, I think it's safe to say, do not qualify for conventional bank financing. So they have to look elsewhere into the alternative market. So we specialize in that entire pool. There's another significant percentage of businesses that have conventional bank financing and they're preferred borrowers, excellent credit, good time in business, good performing businesses. But there's a few situations there where they may have a line of credit with their bank and they're maxed out. And conventional banks are very conservative on their risk perspective. And sometimes companies are growing too fast and they require more capital. They're investing in software, AI now, that's a big investment for a lot of businesses. They're investing in equipment and they typically need to borrow more money. They go back to their bank and the bank says, no, unfortunately, we're capped out, or you don't have enough assets, or whatever the reason is, they're kind of capped at that maximum limit that the bank set for them. So then they turn to the alternative market. So we basically specialize in helping business owners that are kind of capped out at the bank, or maybe termed out at the bank, or can't get bank financing to begin with. So we specialize in about 10 to 12 different products. I'd like to say that about 60 or 70% of our entire portfolio is based around lines of credit. We do them secured and unsecured. So some of them, when I say secured, meaning attached to like secured by accounts receivable or inventory or possibly equipment. So we can do an asset-based transaction anywhere from a couple $100,000 all the way up to, the max is probably up to 100 million. Although we don't do $100 million deals every day as much as I'd love to, but we do asset-based transactions. And then we also have like unsecured lines of credit that are uncollateralized. So where business owners that may not have a bunch of accounts receivables, maybe they're in the e-commerce industry, or they just don't have any hard assets, as long as they have fairly decent credit and good cash flow, we're able to give them a cash flow driven credit and cash flow driven lines of credit. So we have lots of line of credit options that are available for many scenarios. We have a lot of other products as well, but line of credit, I like to lean with that one as our first choice because it provides a business owner so much flexibility than some of the other loan options that are out there, because you're only paying interest on the time that you're utilizing the funds. You could pay them back at any time. So if you need money to bridge your accounts receivable, or you're just falling short on your payroll, you can dip into the line of credit, take a draw, pay it back in a couple of weeks, and only pay interest for a couple of weeks. So tons of flexibility with the lines of credit. I like to say that that's our specialty, but we do have a lot of other products. So we do SBA loans. SBA 7A is the most popular. We also have an SBA Express. We do 5 to 10 year term loans on the business side. We can do equipment financing is another good product for us. Typically 5 to 6 year terms, 100% financing. Equipment financing, we do some real estate transactions, which could be either some of our business owners are maybe renting their office space, looking to purchase a building, either a new building or purchase the building that they're actually operating their business out of. We can do a new purchase. We can do cash out refinance. Sometimes a lot of our clients come to us with a need for capital. They're looking to consolidate debt. Maybe their business is struggling a little bit, or they're just looking to grow, and they have a lot of equity available in real estate, in investment properties, or their business property. So we're able to do cash out refinances as well with conventional bank rates. So we have a lot of different products that are offered. There's other products as well, but most of it's centered around lines of credit and term loans where businesses are just looking for capital to grow or to bridge some short-term cash flow gaps.
Thank you very much, Eddie. I just wanted to ask you the connected questions, like what inspired you to become who you are now? Because you might not have started here. Can you tell us the story behind the scene?
Yeah, I don't think we have enough time on the podcast to go through my whole personal story, because once I start there, it's going to take a little while, but I'll do the best I can to try to do some cliff notes. So I certainly didn't start where we are today. I grew up very, very poor with a family that has had some issues with drugs my whole life. Both my parents, who are passed away today, God rest their soul, and some siblings, my sisters. And, growing up was a little challenging, right? We didn't have many means, and just had to, learn survival instincts and how to, just go a different route. And I managed, through the grace of God, to never touch a drug in my life to this day. I'm 58 years old today. And I just didn't want to go down that road that I see so many in the neighborhood that I grew up in. So for whatever reason, God had a different path for me. And I didn't really get into business until I was probably in my mid-20s. Had a couple of jobs, worked at United Parcel Service, and left United Parcel Service. And I started my career, believe it or not, accidentally. I didn't know I had any talent in sales or any God-given talent. I was at a cheesesteak local place in Philadelphia, one of the world famous places. It's a landmark, Pat Steaks and Gino Steaks in South Philadelphia. And a little old man pulled up with a car, popped out his hatchback, and was selling these imitation perfumes and colognes.
Wow.
To make a real story short, I purchased a bunch of them for myself. They were like $3 to $4 or $5 a piece. I bought a bunch of them for myself, took them home. They were so good that they smelled exactly like the real thing. And I went back and ended up buying more and more. And it just started snowballing. I started seeing potential that, hey, I could sell these to all my friends and my friends' parents. And I started like a little side hustle for myself. And I started just this little cologne and perfume business. I made flyers and I was passing them out to all my friends, and I was spraying everybody. Hey, here's a free sample. Smell this, try this cologne. It's amazing. It's all the big name brands like Eternity, Calvin Klein, White Diamonds for women back in the day was the real popular one. And from there, I just started growing a little wholesale retail business, and it just stemmed from there. And I started seeing opportunity. I eventually took a trip to New York to find out, once I started doing a little bit more volume, I wanted to purchase the wholesale price, not off the guy on the street corner. So I went to Manhattan one day in New York City and found out where they sell these products wholesale. And then I just started buying bulk and started shipping it back and forth and really grew it into a business. I shortly opened up I started actually outside a welfare office in Northeast Philadelphia with a couple milk crates and a table of perfumes, and then grew that into a much bigger stand with other merchandise. But when I went to New York and Manhattan, as you may or may not know, it's the world of opportunity. There's hundreds and hundreds of stores and direct importers, all these different products, whether it's perfume, it's watches, it's jewelry, it's apparel, clothing, plants, anything that you could possibly think of selling. If you want to be in business, it just opened up the world of opportunity to me. So I end up bringing on other products. I got into apparel, I got into costume jewelry, watches, and I started building up a big retail, wholesale, general merchandise business, and called it Perfume World at the time, because I started with the Perfume World. I eventually rented a little store and had my own home storefront. And then from there, within 2 to 3 years, we were doing over $1 million in revenue. Just like that, we're in business, and with very, very little money to start. I mean, I must have started with $35 purchase on the Park Plaza colognes that I was selling. So built that up from the ground up, just learned as I went into that business. Getting into the apparel part of that business eventually, years later, led me into the screen printing and embroidery business, which I spent about 17 years in before selling the company in 2015. And, I'm learning again. It's my kind of like my second business now, a whole different industry altogether. I'm working with business owners that are doing a lot of promotions and a company apparel. They're looking to give promotions away for whether it's good client promotions or holiday promotions for employees, and company apparel and serviceware that the employees are wearing their uniforms and such. So I built a really big business in the screen printing and embroidery for the next 17 years, which was making me a nice stable income. And I couldn't really get over the hump. I was the entrepreneur that felt like I had to do it all. I didn't have much coaching as an entrepreneur, right? There's no school that I went to or any kind of coaching on how to run a business. So everything I learned was hands-on. And I feel like that's the best way to just dive in and just do it. And you learn from your mistakes and you learn as you go. So I was doing the majority of the work and feeling like every big order I had to take, I had to make sure the screen printing was done right, the artwork was approved right. So I was probably spinning a lot of wheels and not really able to really scale it into something really, really big. I just wasn't at that point in my career yet where I had those skills or learned how to delegate and really scale and how to scale a business. So back in 2013, an opportunity came my way from a very good friend of mine that was in the finance business that he was on consumer lending, and he wanted to get into the business financing side, which is the business we're in today. And I kind of never wanted to work for anybody because I've, worked for myself, 20 years back then. And I just felt like at the screen printing company that I had, I just felt like I wasn't challenged enough, or there was just something more. It was a gut instinct. I just felt like there was something more. So he offered me an opportunity. I wanted to kind of learn more and do something different. And I just felt like it was the way to go. And I took a shot. I took it on from scratch. I was president and partner of that brokerage firm, small business finance, what I'm doing now. And we had to learn and build it. It took me about a full year to really know what I was doing and learn. So I knew I was, pretty good. And that's when I kind of sold the screen printing company. And I knew I was all in for finance. And I kind of found my home once I really got in. And learn the finance industry. It felt like it was meant to be, and it was what I was meant for. So just helping business owners, helping them secure capital and helping them grow their business, getting to talk to business owners every day and understanding all the different industry types, how they make money, wholesale, retail, residential, commercial. I really enjoy that, and I listen, and I understand, and I learn so much from our clients that we have today and that we've spoken to over the years. So it's like a natural passion now. We're really passionate about business. We're really passionate about growing and scaling and helping more and more business owners. So we started this finance company. I was president and partner. I stayed there for about 3 years. The business owners, the main owners that hired me to build the company up, decided to open up a funding company, a couple of years into the process. And it kind of like sidetracked where our two goals were and our original plans. And we decided to part ways after about 3 years. It was in December of 2016. So here I am now after selling my business for 20 years, not much security per se. And I think age maybe 46 or right around there. I was faced with having to start all over again. I have a wife, 3 daughters, and a family and a lot of bills and a little bit of a scary time. And 3 months later, I decided to open up a small little shop for myself called 𝐈𝐂𝐏𝐿𝐿C. LLC. And that was my business finance brokerage. So this was my company. Started from scratch with like 2 or 3 employees that were, that came with me from the old company. And we started building it up and just started diving in head first and just, plan B is make plan A work. And that's always been my philosophy, right? You have to make it work and you got to learn and you just got to keep working hard enough until it works. So fast forward into 𝐈𝐿𝐼, we started doing really well in the beginning. We started hiring from like 3 to 5 employees up to about maybe 15 at the most at the time. And business was growing. We're doing good. We're building up our own book of clientele. And then 2.5 years in, I get a call from a friend of mine and was working at a very large company out of Utah, corporate company with like 200 employees. They were looking to acquire a sales office for their business finance tech company that they have, which was like a marketplace for lending, but they didn't have really an internal sales team. Felt like I was on The Bachelor. They were looking at like 30, 35 different shops all over the country. So didn't really pique my interest in the very beginning. And to be honest with you, I finally had 𝐈𝐿𝐼 going to where I was very self-sufficient. I was making a good income and I loved what I was doing. I didn't have any bosses and nobody told me what to do. So I was in a really good spot. I wasn't looking to sell. I wasn't thinking about selling or anything like that to be acquired. And conversations just started going, and my buddy kept reaching out to me, asking me can you send me this report, send me that report, can you send me some of your data out of Salesforce? We're asking a lot of questions about the business. I started doing a couple of Zoom interviews with him. We met in person, we went to lunch, and all of a sudden things just started progressing. And as we went through, a couple of weeks and then a couple of months, he started telling me that the owners really like your numbers. They like what you're doing. They love our interests. We're very aligned because we're in QualiFi, our new company. We're 100% aligned with, we do what's best for the business owner. That's our business model. That's our pledge to our clients. And I tell all of our reps, you can never go wrong by doing what's right for the client, because that's the business that's going to stick with you, stay with you, trust you, and you're going to build long-term relationships from, right? So we don't lose sight of that. So the company that acquired us was called 𝐁𝐵 Inc. out of Utah. They were very much the same business model where they put client first. It was all about the client experience. So fast forward, we went through rounds and rounds of talks, interviews, Zooms. They invited us out, me and my partner at the time, Gus, and we went out to Utah together. And things just progressed. We loved the team. We loved all the people. They were so genuine and down to earth. It wasn't even like, you would think like a big, type of acquisition like that. It would be a lot of like attorneys and accountants. It just wasn't like that. It was just everything flowed great. And we felt super confident with their management team. They felt super confident with our management team and what we were doing. And it just seemed like a really good fit. So as it started getting in, it was down to like 10, then down to 5. And then kind of it just, landed to where we were the shop that they chose, which I was very humbled, because they were looking at some really large shops as well with, larger companies with 50 plus employees, 50 plus sales team. And, we were relatively a small shop at the time. I think we had 8 funding managers at the time. So all went well. We decided to do the acquisition and move forward with 𝐁𝐵 in late 2019, right before COVID hit. So that was another godsend, getting acquired right before the pandemic hit, because that would have been devastating to a small business like myself. So we did the acquisition, went with 𝐁𝐵. We stayed in our office in Pennsylvania. So not much really changed for us. And my role there was pretty much the same as it was here, but my title was head of finance operations. So I was still running my sales office and funding deals and, looking for the big deals and looking to grow NAV's portfolio as well. And stayed there for about 3 years. And things were great. We did really good there. But what I really got out of that experience is it's my first time being part of the corporate stage and being in the corporate, seeing how things run on a corporate level, right? All the different departments and all the different managers and all the different executives and what it's like to get a decision done. And if you have to hire someone, what's the process, understanding systems and processes, understanding coaching and training and all that. So I learned a real lot, and that was a really valuable lesson for me that I think today, fast forward to where I'm at with QualiFi, going through those 3 companies and this now being my 4th in finance, it just set us up for a whole different mindset and a whole different level of expertise that's making me so much better of a CEO than I was 3 years ago, 6 years ago, 10 years ago. So what I typically like to say is my team here at QualiFi, our team, we're taking all the lessons learned and all of the experience from the last 3 to 4 companies and rolling it all into QualiFi, which is going to be our biggest and best yet. And things are going amazing with our new company. We have about 20 employees now, 12 funding managers. And over the last few years, we just hit a major growth spurt, which we'll talk about in more detail. But I know that was a long rant, but that's the cliff notes of the story to sum it up in about 10, 15 minutes of where we are today in QualiFi. And I'm happy to answer any more questions that you guys have.
It's fascinating. It's mind-blowing, I would say, the way you described. Sometimes when people, they reach the top peak, they do not recognize where they come from. And that's, I think, is not a good thing, because if you forget about your roots, you are not the person who you are right now. So thank you very much. I'm glad that you have given enough information for our viewers to know a person born in poverty now dealing with 100 millions worth of finances. So that's quite huge achievements, I would say.
I love stressing that too, because coming from nothing, not having any financing in place for myself, or not having, my parents leave me a bunch of money when they die. So, and again, I will never forget where I came from, because I love the giving back portion of it. And we'll talk about a little bit how QualiFi does that as well. But just being able to help others find good employment, right? I'm hiring now, so I'm giving people jobs, really good jobs in a great industry that's thriving. And we're creating jobs, we're creating opportunity, we're giving back. So I always will remember where I came from. And part of that is who I am. And that's what makes me who I am today. I don't have a college degree. I did spend a year in LaSalle University, but I took up computer programming because I was like a computer nerd back then. And I thought I was going to love it. And I totally hated it. I just left after 1 year. And then, like I said, shortly after, the rest of the story. But yeah, building all the businesses that I've never had any investment capital. So for anyone out there that's curious and thinking and afraid to make that move, I see so many people that I'm friends with today, and people that are they want to make a move and they're just afraid. Well, what if I fail? What if I fail? You want to fail. You're going to fail. It's those little failures. It's embracing those failures is how you learn, so you don't make that same mistake the second time. And you just, as long as you don't quit, you never fail. But those little tiny failures are your lessons learned. That's what's going to make you such a smarter and better entrepreneur. So for everyone out there, that's where I say, go for it, right? Just like Nike says, go for it. Just do it. And take that action, because the action will create the motivation. And from there is all the learnings, and that's where your journey begins. So, yeah.
I totally agree with you, because, when I talk to people, I have disabilities. I am in the autism spectrum, in Asperger's. I am dyslexic. I have a brain tumor surgery. I born in a rural village in Bangladesh.
Wow.
And my father died when I was 4 years old. So my mother, we were 11 brothers and sisters. My mother nurtured ourselves, and we are all brother sisters were established. One of my brother is in the US, I'm in the UK, my sister in the UK, and all other siblings, they are established of their own. So you can see a person, a mother, devoted her lives after my father died. And I'm proud of that. I'm proud of my mother.
Absolutely, as you should be. And that's an amazing story. God bless.
So I'm proud of my mother, because only for her, I'm here. Still, she's alive in Bangladesh. She used to live with me in London. but she left. She doesn't want to live here anymore. So she lives in Bangladesh. Every week I talk to her a couple of times, and she always said, okay, I'm the youngest one in all of my brothers. So she just behaved like me. Are you okay? So she sees my face and she will say, you are not okay. I know that. What happened? Tell me. She's 85 plus.
Wow.
So, I'm here only for her. And I'm proud to say that it doesn't matter that I'm doing lots of good work. I'm in a greatest positions and all other things. But if I forget my roots, I'm not the person that I am. So
100%.
thank you very much.
Yeah, so many people out there, when they become successful in that aspect, they do forget their roots and they turn into different people. And that's another thing that I've learned that's very important through my journey with the corporate world with NAV is culture and business culture and how important it is. So we take our culture very, very serious here. And we do not hire people that don't fit our culture. And we have an incredible culture. And, that's just one small example of one little piece that we focus on. But our atmosphere is everything. Our coming to work and our employees loving our job and loving coming to work every day and actually looking forward to it versus dreading waking up on Monday morning and going into the office. And that's so important. I mean, when I see people coming in with smiles on their face and talking around in the morning, having some fruit and a cup of coffee and just shooting the shit, basically, I love what we're building, and it's just what fuels my passion, and I love it, seeing it come to fruition like it is.
You were saying now today, I haven't met a guest like this you before. So I think I'm going to be bringing you more to my podcast to talk about the culture, talk about different things. But
yeah, we won't get it all in today for sure, but I'd love to do that because there's so many little parts of the business, which we'll talk about further. Of each little part of the business I treat as a business, and that's one of the biggest lessons that I've learned.
I totally agree. So I'm just going to jump into my next questions.
Sure.
Could you discuss the key issues in your industry and explain how your efforts are making a difference for your clients and collaborators?
Sure. So key issues in the business finance industry, I think, over a whole, if I had to choose one, I'd say from a client perspective, right? It's all about the client and their client experience. Is the business financing industry can be very challenging, and it could also be very messy if you don't have the right guidance, right? The reason I started with challenging is because we talked about the complexities and the red tape with conventional banks, right? Conventional banks are looking for clients and borrowers that are preferred, right? They have 2 to 3 years or more time in business. They're profitable year over year. They have 700 plus credit on the personal side. They have assets to back up any type of loan. In most cases, any type of serious money is typically required to be backed by accounts receivable or inventory, equipment, real estate, personal guarantees, the whole 9 yards. So unfortunately, in our world and in our country, there's thousands and thousands and if not millions of businesses that are just starting out, and they're 1 year in, 6 months in, 12 months in, 18 months in, and they don't meet all the criteria that the conventional banks have. So one of the issues is financing that to be able to grow and speed up your growth versus having to do it like I did, selling perfumes on the street corner one day at a time and just keep saving your money and buying more and more and more. Sometimes having some available capital will speed and help you do the things that you need to do for your business, hire some employees, get some employees on payroll, and just, million uses of capital that you can use to speed up your business to where you need it to be. So the challenges are the conventional banks are very, very tough to get secure capital for. And when I say messy, when you go to the bank and you get declined as a business owner, obviously, where do you turn next? Right? There's not stores on every corner front outside conventional banks saying we offer financing, right? So they go online, and that's what the market has over the last 15 or 20 years has really driven the alternative lending space. And that's where we thrive and live in. But it's not all peaches and cream, right? It's very messy for business owners. They'll go out into the market. You'll go on Google or they'll click on an ad and they're interested in business financing. And some of these ads might have 4 or 5 brokers that it might be like a lead generation form where they fill out one form thinking they're going to get to speak to somebody. Next thing you know, they have 5 different brokers calling them, emailing, and texting them, all telling them different things. And a lot of them are very aggressive. In some cases, it's almost like the majority of them could be what you would call aggressive. And where I say it's messy is what we've seen, that when a lot of clients come to us, sometimes, unfortunately, we're getting them after they've already went into the market and found another broker online or found the lender online, and they accepted the first offer that came down their way, feeling that that's the only thing that they qualified for. and they took the offer, and now it's the cash flow, the payment's too high, the rate's too high, the term's too short, whatever the scenario may be, and they're looking to consolidate, right? We see that every day. Clients are coming to us with 1 loan, 2 loans, 3 loans, and it's like it becomes to the point to where it's not affordable and it's really affecting their cash flow. So they're always looking for longer term solutions and consolidation options. So finding a broker versus a direct lender, there's nothing wrong with direct lenders. We have relationships with, approximately 100 of them across 10 products and different risk tiers. But if you go online, you don't know if you don't know who you're talking to, if they're a broker or a lender, without doing a lot of diligence. A lot of brokers in our space are posing as direct lenders because they feel like if I say I'm a direct lender, it's going to be a more likelihood that they'll work with me. They feel like it's like a negative thing that clients, it's like head trash, right? A lot of business owners may feel like if they go to the direct lender, they're bypassing the broker. But let me just give you one small example. I don't want to spend too much time on this, but let's just say you go online, you find a direct lender, you apply, you get approved for $150,000. Let's just say it's 15 or 20% interest, right? And it's an 18-month term, and you accept that. Well, what if you came to a company like us or another good established broker that is credible, that can give you and looks at your financials and your bank statements and your application and tells you in 24 hours or less than 24 hours that, hey, it looks like you're qualified for a line of credit at 10% or 12%, right? And in some cases, we're saving clients 10%. Sometimes we're saving them 20 or 30%. And the reason I say this is because some of the brokers and some of the shops out there only specialize or carry the more expensive product. Like they don't have all the different solutions that we do and some other more experienced, more established brokers do. So, and it doesn't mean they're doing anything wrong. They're just selling what they have available for their clients, right? So I don't want to talk bad about brokers. There's a lot of good brokers out there, and there's a lot that aren't so good. So you're by going to a not established broker or one that's not so ethical or credible or a direct lender. So let's use the direct lender example. You go to a direct lender, like the example I gave you, you get approved. It's one lender. So each lender has like one small criteria of what their element of risk is and what their maximum funding amount is. Some lenders max out at $100,000 loan. Some lenders max out at 200. Some lenders max out at $1 million and above, right? So if you're looking for $1 million and you go apply online and you happen to find a direct lender that caps out at 250,000 and you get approved for 250,000, you may think that's all you're qualified for, but you may be qualified for $1 million or more. So that's just one small example. And if you accept that first rate that comes your way, there may be a different, not only just a better rate. I don't want to make it all about rate. We're very competitive, but sometimes there's way better solutions out there. Mm-hmm. We find a lot of, just one small example there, we find a lot of clients that are coming to us looking for cash, looking for a line of credit or a term loan to go buy a piece of equipment. And they'll take a 1 year or a 2 year loan when we have equipment financing where they don't have to put a penny down. They don't have to use all their capital out of their account. Sometimes business owners are just taking cash out of their bank and just going out and purchasing it cash when they're draining their cash flow, which we all know cash flow is king, where we could give them 100% financing, not a penny down, and finance that over 5 or 6 years, monthly payments starting at like 6-7% annual interest. Mm-hmm. So it's about, to sum it up so you understand, is that we provide business owners with all of the available options. Of course, we start with the most affordable, but we give them a few different options of what they may qualify for. And we go down each one to see what may be the best fit. We'll help them with that decision. But ultimately, our goal is to help you, the business owner, give you all the options so you can make the best decision on behalf of the business, if that makes sense.
That's a great explanation. So I think my related connected questions would be, who are the clients you aim to help and what key benefits do you deliver to them? If you can give us an emphasized version of your service to your dedicated clients.
Yeah, that's a great question. So who we're helping. So we do, of course, everyone likes funding the big deals, the $1 million plus deals, but we do help small and large businesses. The minimum size business that we could, pretty much help on the business side, if we're looking on the business loan, would be about roughly $5,000 to $10,000 a month in deposits. So I'd say $100,000 to $150,000 of annual gross sales. And then the maximum, we fund companies that are doing, between $50 and $100 million in annual revenue. So I'd say our sweet spot, like the clients that we do really well for, are typically doing between, $500,000 to $1 million a year to about 20 to 30 million. So our sweet spot is like that $1 to $30 million range, but no client is too small for us to help. and no client, I'd say no client's too big, but there is some that could be too big. If you're a $1 billion company, you're not going to come to QualiFi, but we've done deals, between 5 and 10 million. We've done several of them, lines of credit. And, we've had a couple $20 million term sheets that were close to funding. So we're in that world of small to large. And what we find is a lot of our smaller clients that we helped out in the beginning, some of them grow their business into really big businesses that we're helping today that become really, really strong clients, and refer us clients as well when we do a good job.
Thank you, Eddie. So to all the viewers, you're watching ICPcast, and I'm Dr. Shah Siddiqui, and I have Eddie DeAngelis, and we are talking today all about lending, finance, and a lot of other things. So we have to do more questions in the next half of the episode, but we are nearly finishing our 40 minutes. So this is a 45 minutes episode, but we think we will bring Eddie to discuss more questions in the future to complete another 45 minutes, because I think with Eddie, time flies very quickly, Eddie. What do you think?
No, it does. And like I said, there's so much that we discussed kind of earlier on that I feel like we can share. And I think it would be really helpful, help a lot of business owners navigate financing, the best ways to go about it. And then people that are looking to start or build a business, or they're in the beginning of the stages, I love to share everything that I'm learning and still learning right now, because we're in a major growth phase right now of uncharted waters to where we've ever been at. And we're in that position now to where we're adding a lot of tech and we're introducing AI into our processes. So I'd love to share all of what we're doing here at QualiFi, and hope with the hopes that it's going to help others as well that are looking to grow their own business.
Thank you, Eddie. So to all the viewers, thank you for watching ICPcast. I'm Dr. Shah Siddiqui, and I have Eddie, founder and CEO of QualiFi. Now, we're going to taking a short break, and stay tuned. We'll be right back.
Great conversations start with thought-provoking ideas, and a visionary leaders turn them into reality. Meet Dr. Shah Siddiqui, an entrepreneur, AI strategist, and business growth partner dedicated to helping professionals and companies push boundaries, innovate, and thrive to drive transformation.
Did you know that 92% of executives consider digital transformation and AI adaptation are essential for staying competitive in today's market? Furthermore, companies that use data-driven insights for decision-making also see a 23% boost in profitability compared to those that don't. Through ICPcast, we bring together the brightest minds in AI, business, finance, marketing, and other tentative fields to deliver strategies that drive measurable success.
Dr. Shah is the founder and C-level executive and leads multiple startups, including Gen Z marketing agency, Neurodivergent Business Consortium, NBC, Time Research and Innovation, TRI, and Green Threads DPP. He is AI and technology expert and helps business
Hello, everyone. Welcome back to 𝐈𝐂𝐏𝐜𝐚𝐬𝐭. I'm Dr. Shah Siddiqui, and I have Eddie DeAngelis, founder and CEO of QualiFi. We got some exciting insight coming up. So stay with us, and we will dive into the world of finance, technology, and innovation. Let's get started. So, Eddie, thank you very much for joining today's conversation. I think viewers will like it and love it. Why? You have identified a lot of challenges, and you also have identified how you have solved these problems with you and with your experience and backlinking your start and who you are now. So it's going to be a great episode for our viewers. So my next questions: are partnerships part of your business model? And from their perspectives, what benefits make you an ideal collaborator?
So yes, the answer is yes. Quality partnerships are a big part of QualiFi, and it's also a big part of our growth plan to continue building those partnerships and those relationships. So currently today we work with, several conventional banks where, as we discussed earlier in the episode, a lot of conventional banks, they're not able to service a big part of the market that don't meet their qualifications. So they unfortunately have to decline a large majority of their business owners that are coming to them that may be clients of theirs. So it's not the greatest situation for the bank to have an unhappy customer that gets declined. So we have a lot of contacts at a lot of different banks that refer clients over to us, because in a lot of cases, when clients don't meet conventional bank financing criteria, we are able to help them in a lot of ways. So it's a win-win relationship. So conventional banks, CPAs, accounting firms, and fractional CFOs are very big for us because they're working with several business owners that, have good relationships with their business owners. So any type of client that a CPA or an accounting firm or a fractional CFO refers over to us, they're typically really good clients for us to be able to help. We work with basically anyone that is working with other businesses. It could be a business consultant. It could be a business wholesaler in any type of, construction industry, where any business that's working with other businesses and they're speaking to businesses every day could be a potential good resource for us. We have other brokers that send us deals that may not be able to open up with a lot of the lenders and a lot of the resources that we have from being in the industry so long and doing the volume that we're doing. So we'll have a lot of other smaller brokers that'll come to us just to utilize us for all of our resources. And it's a big part of our business. We want to continue to grow that and focus on that as well.
Thank you very much. I deliberately asked this question to you, that what you do in relation with returning back. I came from a diverse background family from Bangladesh. I have seen struggle. I have seen also established a lot of different things. So in between that, I have a duty to return things back to the society that I was belong to.
Absolutely.
And now I'm supporting individuals in different spaces. In my office in Bangladesh, I continually train people. I pay money to train them to get a better job, to get a better qualification. So after 6-7 years, I can see that those people that I have helped, they're in the UK, working in corporations, working in universities.
Yeah.
In the USA, last week, one of my employee that I was supporting him, he got scholarships from the biggest university in the US. So
amazing.
These are the things that you think that, okay, that's a very good achievement because you're returning back. And
yeah, it just feels better than even making any amount of money, because you're seeing everything and all that work and those gifts and even the people that you're helping and you're hiring. Like we're mentoring the young ones that we hire that are out of college, and because we have so much experience, our management team, and we're even promoting healthy eating and things like that, and going to church and just being a better human being all over. It's not just about the job, but that's what's part of our culture that we're all embracing, and why we are, I feel like that's a big contributor to why we're seeing the success that we're seeing right now.
I totally agree. So it's been a pleasure talking to you, and we're going to be bringing you with another episode because we could not finish the entire questionnaire. There are lots of things to talk about. We're going to be dive into details in our next episode. So thank you everyone for watching today's 𝐈𝐂𝐏𝐿 podcast, and thank you for Eddie to add value to these episodes. And I'm going to be welcome you to the next episode with Eddie, and we're going to be recording that in next couple of weeks' time, and we will let you know when we're going to be doing the premiere. So I hope that today's conversation with Eddie DeAngelis, founder and CEO of QualiFi, has sparked fresh ideas and provided valuable insight to elevate your business strategies, whether it is in sales, marketing, finance, or innovation. Don't forget to subscribe to our newsletters on icpcast.com. Share this episode with your network. Leave us a review. It helps us reach and inspire more leaders like Eddie. So like our page on LinkedIn and subscribe to our YouTube channel, Sales Funnel Accelerator. And to know behind the scenes and content and updates on upcoming episodes, please stay tuned. Until next time, stay inspired, stay curious, and keep leading the way in innovation. So Eddie, thank you and bye-bye.
Thank you for having me, Doc. I look forward to the next episode. Thank you.
Thank you.